What is going on, guys? Nick here, back with another video. A question I hear all the time is, how do I research stocks? So the very first step that I always take is to just get a basic sense of how the company is performing and if I'm actually interested in investing. I'll use Morningstar.com and I'll look up the revenue and net income growth over the past 10 years. It's very easy to do this, and there are a lot of companies at this point I'll end up eliminating because of a lack of growth or their performance isn't as good as I thought it might be. So let's take a look at a few companies so you guys can see some differences. So to make this easier to see, I went ahead and made charts to look at instead of the numbers. I find doing this makes it a lot easier to see the trends. Looking at Google first, this is about as ideal as it gets. Revenue growth is very stable and consistent, along with the net income growth. We can see 2017 was a down year, but that was because they had to pay a big fine. We also see enormous profit margins, with 22% margin most recently. Moving on to the next one, McDonald's, we see a chart that initially looks pretty scary. Revenue growth is important to pay attention to because it shows how the total business is growing. In most cases, revenue growth will limit the company's growth because there's going to be a maximum amount they can cut costs to. This is why McDonald's pretty rapidly declining revenue growth should seem like a concern at first. However, when I look deeper into the business, this is actually happening because they are changing their business model. They're switching to a heavier mix of franchise stores that produce less revenue but equal, if not more, profits. This is why we can see from 2015 to 2019, McDonald's grew its profits even though revenue declined. 2020 can be explained by the COVID disruptions. So here's GameStop's chart. We can see flat revenue growth and then a pretty rapid decline in 2019 and 2020. Margins are all pretty slim with GameStop, which is normal for retail. We also see some inconsistencies with their profits, with 2013 and 2019 showing losses and 2018 just barely profitable. Between 2018 and 2020, they closed 800 stores. They have around 5,000 now, down from the 6,600 they had in 2017. This chart concerns me because of their recent losses and fast revenue decline. I'm sure store closures due to COVID has amplified this, but 2019 wasn't already looking great. Okay, so the last chart is AMD. AMD looks pretty crazy at first, but the thing to know is in late 2014, they appointed Lisa Su as CEO, who turned the company around. If you look at the company from 2015 on, you can see a pretty impressive turnaround. When I learned that a company has a CEO change, I always recommend paying attention to how the revenue and profits look since that person took over. Sometimes the business philosophy changes when the new CEO takes over, so it's important to look for these changes. Okay, so now that we have an overall sense of how the company is doing, we need to start doing some background research. Now this part really depends on you and how well you already know this industry. The more you know, the less work you need to do here. You want to have a general sense of the industry and how your company fits in. Are they the market leader? Are they challenging the market leader? Is the overall market growing? So I like to look at some of the headlines on Yahoo Finance and see what the discussion is about. I'll usually read a few articles if there are any that catch my eye. It gives me ideas about what to focus on when I start getting more specific in my research. I also like to go on YouTube and search companies' names with CNBC. CNBC puts a lot of videos on YouTube talking about most major companies. However, if you're looking to get information on penny stocks, this may not be as useful. In general, I look for CNBC videos about different aspects of the business and don't really pay that much attention to interviews they have with analysts. I don't really want to hear what analysts have to say at this point because I want to form my own opinion first. For an example of background research, when I made my Salesforce video, I actually had no idea what they do. When I read they make customer relationship management software, my next step was to learn what customer relationship management software actually is. I wanted to know why it's useful and how big of a market is it. I also find it helpful to watch interviews with the CEO. I'm looking to find out what do they want to do with the business going forward, what challenges do they see, and how will they overcome them. Remember that the CEO is in charge of managing the business that you're investing in. If this is a stock that you're going to hold long term, this person's success or failure will determine if your investment pays off. So you almost want to consider them as your employee. Okay, so now that we have some background research, we need to do some specific research. Now this is where I'll start reading the 10K. I made a video explaining how I read this, so most of this will be a summary. But I like to start with the business section and find out what they're about. Sometimes these are more specific about what the company does, and sometimes they read more like a mission statement. Then I like to find out how many segments there are and what do they do. This helps me understand how to break this company down into simpler parts. You should start searching for more information about the individual segments. You usually can do this by just Googling basic information about the segment. When I did my Uber video, I had to do a lot of research on Uber Freight because I didn't really know that much about it. I actually ended up watching a lot of trucker YouTube videos who did reviews about their experiences using Uber Freight versus the other major competitors. This gave me a pretty quick and accurate understanding of Uber Freight and what it was like compared to their other competitors. Now, segment information might be difficult to come across if you're searching for information about penny stocks or small cap stocks. If you aren't able to find much, at least look for each segment's growth and how much they contribute to the overall business. Which segments are the ones that really make the company money, and which ones are growing and which ones are declining. Then I recommend learning about the company's expenses. You want to find out where they're spending the money that they're making. Is it all eaten up by the cost of revenue, which likely means that the company will be a low margin business? Is it all going into marketing? Do they spend a lot on administrative expenses? Be curious about what's going on. You also may run into terms that you don't know here. The best way to learn is to just use Google. Investopedia has fantastic information and short videos about a lot of accounting definitions, making these easy to understand. If you're new to this, you'll spend a lot of time Googling words at first, but you'll end up building knowledge quicker than you expect, and eventually you'll start to recognize terms over time. A lot of these terms that you come across aren't that complicated if you put in just a little bit of effort to read about them. Make sure you go through the full income statement, the balance sheet, and the cash flow statement. If you've never read one of these before, start simple with the basics. On the income statement, you want to start with the revenue or sales. This is how much money the business actually brings in. Then look at their operating income, or how much money their business made after they subtract the costs of their business. Then look at their net income, which is how much profit they made after things like taxes and interest. On the balance sheet, you can start with how much do they have in assets, how much do they have in liabilities. If you take the assets and subtract the liabilities, you'll get the equity that the company has. Then you can figure out how much long-term and short-term debt they have. Often short-term debt is called current debt. Compare their debt to their equity. It's better to see a low number than a high number here. I typically want to have 0.5 debt to equity, but depending on the circumstances, it's okay if it's a little higher. On the cash flow statement, you want to see a company that has a positive number for cash from operations. Then look for negative numbers next to cash from investments and in cash from financing activities. If these numbers are negative, that means that they're putting cash into investments and repaying debts. If these numbers are positive, that means that they're actually selling off investments or taking on debt. Now, these are very brief overviews of the financial statements meant to help get you started. I recommend learning more about the individual items so you can get a better understanding of these over time. So now that we have a good understanding of the business, we need to decide what we actually think that it's worth. Now, I made a full video explaining how I do this, and if you're interested in learning, I recommend clicking the link and finding out how I do this. But in general, I like to use expected growth rates to determine an appropriate PE or price to sales ratio. I use that to determine what I think the stock is worth. I'll use all the research that I've done so far to forecast the future outlook of the business. So do I see growth continuing? Do I see it declining? Is the business currently in trouble? And if so, how do I see growth as the business recovers? This growth rate is supposed to be a long-term growth rate, not just the next year or two. So once I've determined what I think the company is worth, I'll look at the stock price and compare this to the valuation. Is the stock undervalued? Is it overvalued? Or is it fairly valued? If we're currently interested in buying, we need to determine when the best time to buy is. To do this, you need to do some behavioral analysis and some technical analysis. For behavioral analysis, I just want to get an idea about the general sentiment around the business. I want to read the news about the company, and I may listen to some of those analyst opinions I skipped over earlier. I also really like this website, Seeking Alpha. I'll read the headlines that people write about the company and read some of the interesting stories, and then I like to scroll down and read the comments to see what the general public thinks about them. Companies that people are optimistic about tend to go up sooner than companies that people are pessimistic about. Then I want to do some technical analysis. I like to keep this pretty basic and just look at the 50-day, 200-day moving averages, the RSI, and the MACD. I try to buy the dips when I see the RSI around 30 and the share price below the 50-day moving average. I also want to see a slowing MACD indicating that negative momentum is slowing. Okay, so the very last step is actually really simple. All we do is look for opportunities to buy. This takes a lot of patience, and it's why I make it a whole step. I also think that it's best to have a few companies to watch all at once. Now, if you want to make real money in the stock market, it's best to not treat it like a get-rich-quick scheme because it's really a marathon. Opportunities will always come, and when it seems like a stock's run is just going to continue endlessly and you're missing out, read the technicals and wait for your opportunity. Crazy runs do not last forever no matter what stock it is. Okay, so that's the video. I hope it helped you get a general outline of how to do basic research. It's really just getting a general sense of the company and doing some background research followed with specific research, evaluation, and then waiting for the right opportunity. If you like this kind of content, make sure you subscribe and hit the bell notification so you know whenever I upload a new video. And as always, thanks for watching.